Everyone is waiting for the San Antonio market to crash, but the 2026 data just came in and it's telling us a completely different story. If you're sitting on the sideline waiting for 2012 prices to come back, you're missing the biggest shift in a decade. Here's what is actually happening. So, hello, everybody, and welcome to our deep dive into the 2026 San Antonio housing market forecast. I'm David Karras, your local real estate broker, and as we look ahead, the data shows that we are entering a pivotal year. After several years of intense shifts, 2026 is shaping up to be the year of market equilibrium. Now, let's take a look at the macro view, interest rates and affordability. Let's start with the question of everyone's mind, interest rates. Now, what are they going to be? Per the National Association of Realtors and Realtor.com, we're expecting to see a 30-year fixed mortgage rate to average approximately 6.3% throughout 2026. Now, while some optimistic forecasts from Fannie Mae suggest that we could see rates drop downward to 5.9% by the end of the year, the general consensus from the Mortgage Bankers Association is a steady hold in the low sixes. Now, according to Keeping Current Matters, this stability is crucial. It's helping to break the lock-in effect, where homeowners feel trapped by their previous low rates. Now, per Realtor.com, while the sticker price of homes continues to rise, incomes are finally starting to grow at a faster pace than home prices. This means that in real inflation-adjusted terms, affordability is actually improving for the first time in years. Now, let's take a dive into inventory and sales volume projections. So this movement of homes is what we're going to check out. Now, per Zillow, existing home sales are projected to rise about 4.3% nationally. Locally, Lawrence Yun, chief economist for NAR, is even more bullish, predicting a potential 14% increase in existing home sales as pent-up demand is expected to release. Now, in terms of inventory, San Antonio is currently leading the way in Texas. According to the Texas Real Estate Research Center at Texas A&M, San Antonio has reached a balanced state with roughly 5.5 to 6 months of supply. Now, 6 months or more is considered a buyer's market, so we're pretty much there. This is a massive shift from pandemic lows when we were under 2 months worth of inventory. Now, what does all this mean for you? Per Zillow's 12-month forecast, San Antonio may see a very slight nominal price correction of -8 or -0.8%, effectively making prices flat. This is good news for buyers who have been priced out, and it's a sign of a healthy reset rather than a crash. Now, next, let's look at our regional growth and construction hotspots, which are also going to pivot into the real estate world. Construction is moving where the jobs are, and we are seeing a significant pull to the northeast and a push to the west. The northeast corridors, such as Cibolo, Schertz, and Selma, we're seeing a lot of growth over there. The northeast side is currently the MVP of commercial-driven real estate residential growth. Now, in Cibolo, the major headline is Project Theo. Per the City Cibolo Council, a local developer is producing a proposal for a Fortune 500 company that's going to be bringing in a $450 million massive high-tech distribution center on Santa Clara Road. Now, this isn't just a warehouse. It's a robotics-led facility bringing over 425 high-paying jobs to the area. Now, that Fortune 500 company, I think it's Walmart. But Selma's growth is substantial as well because construction is underway at the Baptist Health System Hospital near Retama Park. Healthcare hubs are historically one of the strongest drivers for long-term residential real estate stability because they bring in a recession-proof workforce. Now, New Braunfels is also continuing to grow as expansion continues around Creekside, and with a new Costco coming in to serve right there at Mayfair, that's going to be providing a massive anchor for retail growth. Now, per Comal County Economic Analysis, New Braunfels remains one of the fastest growing cities in the nation with a projected 1.5% population increase continuing through 2026. Now, let's jump over to the far west side. Per SABOR, the San Antonio Board of Realtors, the far west side, specifically areas like Alamo Ranch and Redbird Ranch, continue to lead the way in total sales volume. Builders here are pivoting. Per Realtor.com 2026 report, builders are now focused on attainable luxury, smaller, more energy efficient floor plans that allow first time buyers to enter the market at lower price points. Now, there is a substantial commercial catalyst sparking buyer interest as well. It's not just houses, it's the lifestyle around them. Commercial growth is the spark plug for residential demand. Now, retail expansion throughout the area is also growing. Per Texas Real Estate Research Center, we are seeing retail following the rooftops. Now, large-scale developments at the shops at La Cantera and new retail hubs at Marbach and Loop 1604 are making the far west side a self-contained ecosystem. Now, as we go back to the northeast side, beyond Cibolo, the Port of San Antonio tech hub continues to expand. As aerospace and cybersecurity jobs grow, we are seeing a surge in demand for mid to higher tier housing in the southwest and the northwest quadrants. With that, means there's more infrastructure that's needed. Now, the infrastructure is also impacting the growth. The $90 billion in statewide infrastructure investments, as noted by JRH Engineering, is finally hitting the ground in San Antonio with major improvements in the 1604 area. We've already seen a lot of that coming around. And I-10, which is going around and pushing towards Houston now in Seguin. It's making the commutes more obtainable and viable for communities outside of the loops. So this is a great opportunity for growth there. Now, to wrap this up, the San Antonio 2026 market is defined by balance. Per Zillow and NAR, the bidding war era is largely behind us, and only 11% of homes in Texas are selling above list price compared to nearly 30% nationally. This means buyers have leverage to ask for repairs, closing costs, rate buy-downs, title policies, surveys, home warranties, you name it. Now, for sellers, the days on market has settled in at a healthy 60 to 80 days, with many communities averaging almost nearly 200. While we might not sell in a weekend, the steady influx of jobs from Cibolo's distribution centers, the Toyota transmission plant, and Selma Healthcare expansion as the hospital gets done, it's going to ensure a constant stream of qualified buyers. Now, as your local real estate partner, my advice for 2026 is simple. Strategy over speed. Patience is a virtue that we need to focus on. With more inventory and stable rates, we have the breathing room to make smart, long-term investments in the Alamo City. I'm David Karras, and this is your 2026 housing market forecast.